Good morning and welcome to the Early Bird. And here we're looking at the Dow Jones on a daily chart. And I was just looking at this particular pattern up through here on the top here as the same sort of pattern as it was at the top of the before the bear market started. And what I mean by that is that you see these three little waves here, yeah, then these three little waves here, and then we've had this move down and this move back up here. This one's moved back up a little bit higher than it did in this picture I'm going to show you in a moment, but just to recognize this three wave structure here is much the same as this structure that we had over here at the top here at 14,000. So we had this three waves down and we had three waves back up through here, and then we had this this move down through here. So it's kind of like we're here, but in our case we've moved up a little bit higher through here. So we have to be aware that that a pattern like this could unfold through here, and we need to be mindful of that at least. So what we're looking at so far through here though is that this move that's coming down through here, that's what we're studying. Now this is what we need to be careful of, this situation here. What we've got at the moment is we've got this move coming down through here, and the Dow hasn't moved this far down in compared to this particular move up through here just yet, but the S&P 500 has moved down a bit more severely. So but we'll see. But what we're looking for, if we get this structure coming down through here, then we get this one back up, we have to be prepared here. Okay, so that's just that's just the point that I'm not saying that this this will happen through here like this, but this would be the place that would need to be prepared for it, and we would take some small positions to build a larger position into the market. So yeah, you can have a look at this yourself. It's just a thought, and just sharing those thoughts. So we're back over here. So this move down through here at the moment, we were considering this as a five-wave structure up in terms of 1, 2, 3, 4, and 5. Now this wave moving down through here, if it's a wave 4, then we would be looking at that at a 38.2 retracement level, which would be as I mentioned yesterday, at the 12,400 here, say, without getting too involved in it. So we're looking at that situation there. So if we'd seen a move that come down here further, yeah, then we'd have to consider that situation I just mentioned then. Okay, but the beauty about that is that we'll be able to sort of work it out as it unfolds. Now, what we're sort of looking at here so far is that we are looking just on the close there. I can see that we are looking at 5 waves down like that. This is yesterday's bar, not last night's in here. Not that it moved down much further, we'll look at that in a moment, but it does appear that we've got a 5-wave structure down through there like that. So we can expect somewhere from the 400 here, we can expect a move back up through here. Now, as a wave 4, we can get this sort of pattern here. That's what we're sort of looking at as a wave 4 here. So that down to there, this back up through there somewhere, this one down to maybe a flat, shouldn't go much further than that, maybe into here, and then a push up from there. So that's what we're kind of looking at in one regard. The other situation is that we'd be looking for 5 waves down here, 3 waves back up. This little one here would have 5 waves in it for an ABC correction, like we're talking about, an A and a B and a C wave, and then a move up from there. But if this starts to come down quite sharp through here, then we're going to end up with that picture that I just mentioned just a moment ago, and we'll be looking at something like this here. So a much stronger move down through here, and this is where we need to get prepared here. So we may have some small losses in here. That's just the way the cookie crumbles, but building in a small position here makes it much easier to get the positions in around here, because all these lows here and trend lines are going to cause the market to bounce around a lot. So having a little bit up your sleeve in this little area here to risk that, it's just finding the balance line within all of that. So that's just something that we need to this is what we'll be looking at, and this is the juncture at where it's going to take place, and the rationale behind that, because it's okay being an analyst, but we also need to be traders as well. So we need to trade what we see, and we need to find a way in and a safe way in to do that. Okay, so that said, just want to have a look at the Asian markets, because as you know, our markets have really moved down quite strongly, partly because of the US market situation here, and or the Asian situation, and partly because of the carbon tax there. So, but the markets had already started turning when you start looking at CBA, which is our leading bank. It I'll just have a look at that now. The CBA had already started moving down, so it was already unfolding. If you'd seen our charts on this, which I think still on the website there, we had this as a 618 retracement level back up to this point here, and then unfolding down from that point there, and also with the XXJ as well. I'm talking about this because the banks lead the way. So when we're looking at our banking sector here, with our charts as well, you would have seen that we had the 5,000 level here. The chart is a bit old, but it still serves the purpose. I think it's still there. It basically was down here, and we're looking for a retest back up there. And we can see that retest in 3 waves there for the Elliott people. So we've got that A, B, and C there. And now we're seeing a failed retest here, and we're seeing further downside through here. So that's why we're a little bit hot on the banks. And the banks do lead the way. So we are looking for lower ground within that there. So this is a bit of a leader and a preempt that the XJO will be taken out as well. So when we're looking at the XJO, you can see the situation here. I'll be taking now the SPY futures contract has already taken the low out through here, and the SPY already has 5 waves down through here. So we'll be looking at that. Now this particular picture here, that we would have to now look at this situation here, which we were in a way anyway. We're looking at this. We're actually looking at going higher up into this sort of area up here, but it's just not there. This is the actual correction here. I've been over this intraday now, and it's an A and a B and a C wave to here, with the C wave has got 5 waves in it to here. That's what that is there. This particular move down through here that's not finished yet will have 5 waves in it coming down through here, finding some sort of support in amongst all this lows here. I've just used the subgroup 2 area down here as the 545 is the minor trading level, of course, but the subgroup 2 area down here of 4472 and 4480 and 65, 72 and 80, but the 72 would be the line in the sand. The 72 as resistance would see further downside, but we're looking for 5 waves down through here, and I'll point them out on the SPY in a minute. And then we'd be looking for, because we've got 5 here, we'd be looking for a 3-wave counter trend after that, and then down again after that. So that's what we're looking at this stage here. But at the end of the day, the 4,500 is the line in the sand. Our bearish counts on this have been there for a while. This is it here. We're just expecting it to come back up to cover a gap in here. So we've had this from here, we've basically come down through here, a bit further down here, and then we've moved up through here. But we seem to be in a little bit different from this space here. But we are in this move down through here, and we will be navigating the 4,500 through here. And the reason I say that is because I can see from the Asian markets that that would be the case. So when we look at our neighbours here, we can have a look at the Hang Seng here it's got the exact same sort of structure as here as our markets have. So it's not as bad, but we need to look at that coming lower. The Nikkei is probably just starting its thing there, but it will play out at the 10,000 there. So this move down through here is pretty much a move down, then the A, the B, and the C back. So we'll see this eventually get locked under here, and the more that gets locked under here, we should be able to do a short from there. Our other markets, let's have a look at Singapore's in the same boat as us as well. So it hasn't got its 5 waves up there yet, so we'll see that. And the Shanghai market here that we've been looking at through here, it's had a positive wave count, and we're expecting this to come back as well, because if you remember, we've been talking about 5 waves up through here in terms of 1, 2, 3, 4, 5. So that would give us the 5 waves up through here, and we've been looking at that now for been yakking about it for quite some time, and this would also be at the 2,800 here, which is a profit-taking number, and on a minor trading level just here. So what we'll be looking at through here is we'll be looking for this to pull back. Even though this is a positive structure in 5 waves up here, we'll be looking for this to pull back. The normal thing to pull back is 61.8% here, of the length of this move here in 3 waves here. But we'll see how we go with it and see where it goes to. There's other numbers in here like 27.27 that's in there, and the 27.72 would also be holding it up at these lows here. But what I'm trying to say here is that when we got up here, we would be seeing a correction here. We can see that it is having a correction. We can see that it's still up there, so our sort of instinct telling us that it's not correcting, but it actually is. And if this does correct a little bit further down, what that will do is that will just place more pressure on the on our cash market, the XJO. So just by placing that pressure on there, it really places a lot of pressure on the 4,500 mark and so forth. So we'll see our banks lead. We'll see the Asian markets here become softer as well, placing more pressure on our markets. And we're seeing the US markets down too. And I mentioned the other day that the currencies are part of the picture as well. The bond market is as well, but the euro will be working with the S&P 500, and the euro is making new lows down. So we'll be looking at that as well. So here's the Dow Jones on a sort of intraday chart here, 30 minutes. So we were looking at 38.2 retracement level here, which is at the 12,430, which pretty sort of much there now, but what we're looking for is 5 waves here. So we're looking at down for 1, back for 2, down for 3, back for 4, and then down for 5. Now, because we got 5 waves there, it simply means that we're going to get another 5 waves. So we'll see 5 waves in this little 5th wave here. It can come all the way down to 12.4 there. So we'll see 5 waves in this little structure here if you're intraday trading and doing the sub levels and so forth. But the point is that we'll get 1, 2, 3, 4, 5 down to here. And because we've got 5, it means it will get 3 back up, probably retesting the 12.5 or thereabouts in this area here where the supply is and the volume is. And then we'll see it roll over from that point there. So we've got 5. If we get 5 waves on the turn of a market, then we'll get 3, then we'll get another 5. That much we can sort of assure ourselves with. So it might not be all doom and gloom, but what I'm saying is that because we've got 5 here, we'll get 3 and then another 5. So that could be just a larger ABC correction, by the way, too. So we know that with our levels as well, that once we come under 12,200 here, then the price will be pulled back to the 12,000. And if it's pulled back to the 12,000, then we've got to bring in the 11,800. So it's just that they're just degrees of bearishness. So that's what we've got to watch out for. So first of all, we understood that it would come back to the 12.5 and the 12.4 because it's the 38.2 retracement level. So we can't lose ourselves in fear at this stage here. There's plenty of time for everything. So let's just see how this unfolds from this particular point of view here. And we'll be looking at 5, 3, and then 5. So yeah, so just be careful not to get sort of stopped out within all of that. And the S&P 500 is the same as well in terms of looking for 5 waves down. Would be looking down for 1, 2, 3 down to here, back for 4 to here, and down for 5 through here. Now, this particular pattern on the S&P 500 here is important because it is it's the same as the Australian dollar, same as the euro. So it's a common pattern, that intraday pattern that's occurring, and this particular pattern through here, I kind of see it in 5 waves actually. I see it in terms of up for 1 and back for 2 here, and then we see it up for 3 here in terms of little 5 waves up here for 3, back for 4, and this is all a bit of sort of a running correction here, but the A wave, the B wave here, and the C wave here. We don't get many running flat corrections, but there you go. And then the 5th wave up here. So it's kind of like we've got 5 waves here. So we'll be looking for 3 waves coming back, and the support will be at 310. And this will be the same for currencies and the, so coming back into this area here somewhere, and then having another go up through here, and then coming back down. So basically an A and a B wave and a C wave. Now, because the A wave was quite complex, the B wave will be quite simple, but we can look at pulling back into the 1310 to 13.5 area here before we see another push up through here. So this is a correction, a wave 4 correction unfolding here, and it's just the A, the B and the C, and then down through there. So our market, this is the futures market here, and this is quite important here because what we're actually seeing here, this hasn't occurred on the cash market yet, on the ASX 200, but you can see the futures market's already made a new low down through here. Yep. So it's kind of leading the way down. And what we do have down through here is we do have a nice 5 wave structure down through here. I know it's a bit difficult to see with there, but just we can have a look at that, I guess. But it's just sort of splitting hairs at the moment, but basically down for 1, back for 2, 5 waves in here for the 3rd, back for the 4th, and down for the 5th. So we're getting that pattern that I just mentioned on the S&P 500. You can see it in here as well. So it's the same sort of pattern in here. So we can count this as the 3rd wave here because it's the strongest. So we're seeing 5 here. So we'll get 3 here, and then in through here as well. So expect an ABC correction within this, but because I'd get my head together. Okay, so this correction here, what we're talking about on the XJO, this A, this B, and this C wave here. Now, that's a nice ABC correction, and we got this wave down here. Now, what we don't know is we don't know if this is wave 1 or wave 5. So we won't know until the Dow and all the rest of it basically fails at that particular point, because this can be a whole ABC for a 4th wave through here and a 5th wave down to here, and then we move up from here. Or this is wave 1 coming down through here, and we'll see an A and a B and a C wave back up. It can pull back up 61.8% of this length here, yeah, but an A and a B and a C wave into here, and if it fails over from that point, then we'll use the 472 and the group 2 here as a trigger to be short from that market there. Of course, the bias would already be short being under the 4-5 here, because you always need to be on the right side of the closest largest number, and then use the smaller degrees of numbers to as triggers as support and resistance to move in, because it's a game of probability and you need to collect them to be successful. So that said, okay, so looking at the drivers, now the copper market here, which has got an 80% sort of relationship with Australian dollar, so, and we're in the materials sector as well. So what we've been looking at here is this 3rd wave up through here. So we're looking at this being a 4th wave back into here, and that's unfolding quite nicely. Now, what we do have here, if you can see, this is probably better to get onto the futures latest contract rather than the continuation contract that I got here. It's a bit spotty, but this situation we've got down for 1, back for 2, down for 3, back for 4, and down for 5 here. So that's likely just to be the A wave. This is going to be a B wave, and there'll be a C wave coming down as well. The 440 would be probably in the top there. If it's not there, well, then it will be not far beyond that there anyway, but that would be the 61.8 retracement level of that move down there. Now, if this is not a 4th wave and this is some sort of top here, then what we'll get is this 5 waves down through here for wave 1, back for wave 2, and then we'll see a wave 3 come down. Now, if this market moves below the 425 here, then it's pretty much got a top in place at that stage there. So keep an eye on that. And the oil market, we've been talking about this since it's been reacting from the 100 area there. So we've got this 5 wave move down through here, and we're looking at a 61.8 retracement level there. So that 61.8 retracement level there, as you can see here on a smaller chart here, is pretty much into play here at this point here. We were expecting the bounce to come from the 95 there, but markets have been pushed around a bit. But anyway, the bounce has come in after this little 5 waves down here, and this would be the target zone here. The supply would come in at the 98 there, so that's where that would be pegged there. And I say that too because it does appear that this has got 5 waves up. So this one here is a little 4th wave pullback, then another little push to the upside here. So that will probably coincide with the S&P 500, that little ABC correction I was talking about. That should play out in through there. But once this is complete, then we'll have to expect more downside from that. And we'll be looking at that as a short at once this is played out here, and we're starting to get lower highs come into place on the intraday level there. Now gold's gone into safe haven area here. So we were looking at this yesterday here in terms of across the 1550 here, but you can see this. I know it's all hindsight now, but what we were looking for here is we're looking for a 3-wave pattern, and this is the 3-wave pattern, because if you get a 3-wave pattern in a market that's going up, it means it's an A and a B and a C. It's a corrective pattern, and once it's complete, it will move up. So what we do is we wait for this 3-wave pattern to unfold, as an ABC, and that's got its own little rules and structures within that. But where it becomes interesting from the trading point of view is that once it's done this A, this B, and this C here, not to get involved in that. After it's done that 3 waves, then it gets back up and sits on top of the level in this regard, the 5 here, the 50. Then that's the time to trade. So that's perfect. That's what it's sort of all about there. And then you trade to the next levels and you get out. So the next levels in this particular case, we've got 1, 2, 3, 5, and then we would be at 8 here. Right, so 8's a profit-taking number, and the way that I like to handle the levels, just on a general basis, is that if we're coming up through here, is to take some at 65, because this is group 2, 65, 72, and 80. So to take the money, take part at 65, and normally I'll take the rest at 72 there. If 72 becomes support, then I'll trade to the 80, and then I'll get out, and then I'll wait for that to become support, and then move in from there. Now, that's fine. If you understand the wave structure, then it becomes a little bit more interesting as well, because we can see here that we've got, when we're looking at this here in terms of Elliott, we're looking for 5 waves. So we're looking for something that we recognize. So we can see that that's the strong bit in the middle there. So that's got to be the 3rd wave. That's where all the volume comes in, because people recognize that, well, it is going up, so they all pile in. So we've basically got up for 1 here and back for 2. And then we've got the 3rd wave going up. Now, the 3rd wave will have 5 waves in it, the same as this wave 1 here will have 5 waves in it. So here we're looking, in the 3rd wave, we're looking up for 1, back for 2, a little triangle pennant pattern there, up for 3 here, 4 and 5. So this is just the top of the 3rd wave here. So we still have the 4th and the 5th wave to go through here. Now the 5th wave won't be much, because when you get the extension in wave 3 here like it is, then the wave 5 here will be the same distance roughly as wave 1 here. So anyway, a little bit more to go there. So we'll see, once that occurs there, then we'll see another correction unfold in through here. So with the currencies as well, first thing that we look at is the US dollar index, because it's the flip side of the coin. And we've been looking at this move up through here, but it is at an interesting point here, and I want to explain this, is that we're tracking, working out the little 5-wave impulse wave. An impulse wave is 5 waves, and that makes wave 1 there, or it can make an A wave. So once we've got wave 1 there, then we've got an A and a B and a C for wave 2, or a B wave, and then we've got another 5 waves up through here to make the next section. So basically we've got 3 waves here. So we've got this wave of 5 waves, 3 waves, the A, the B, and the C, there are 3 waves, and then we've got 5 waves up through here. I know that's hard to work out, but what I'm trying to point out is that we've got 5, 3, and 5. Now that can be an ABC correction. That's the reality of it. That can be a corrective wave up. If we get 5 waves up, then we're in business, and 5 waves would be coming back here for 4 and then moving up there for 5. A bit like that. When we got 5 waves here, we knew that we'd get an ABC correction, and then we'll get another 5. That much we can be assured of. But once we get to this point, it's not so assured. And this is where a lot of those Elliott Wave software programs run into problems, because they just assume that this is going to be the 4th wave, and then there will be a 5th wave up there. That's their problem, and that's their weak point. So we need to have a look at this closely here. So what we've got down here so far is that we've got 5 waves down through here, and you can see those 5 waves through here. So we can see we've got down for 1, back for 2, down for 3, there'll be the 4th in there and the 5th here. So once we get 5 waves in a different direction like this here, then we'll get a 3-wave counter trend pulling back up 61.8%, and then we'll get another 5 down. So basically an ABC correction. So an A and a B and a C wave through here. Once that's finished, then we move up. Now, if we're looking for 5 waves up, we'd be looking for 1, 2, 3, back for 4, and then up for 5. If this is a corrective move up in 3 waves, like an A, B, and C, a 5, 3, 5 structure, then that would be the top there, and then we'll have down for 1, back for 2, and then we'll go down for 3 here, back for 4, and down for 5. So this is a juncture where it can be a game changer in direction. So this is what we'll be focused on, and this will be important because it will also, apart from the euro doing the mirror image, it will have some influence on the Australian dollar as well, plus the other pairs. But also, if this is doing the mirror opposite to the euro, then it will also be doing the opposite for the US stocks as well. So this will be important here. So we need to see this little bit play out. So as I mentioned in the Dow Jones, with its 5 waves down, we need to see this play out as well. So our local market here for the currencies, this is a little bit sort of messy here, but basically what we're sort of looking at through here is we're looking at a 3-wave structure coming down in terms of well, it could turn into 5 waves, and it's highly likely, but we've got down for wave 1 or an A wave, back for wave 2 or a B wave. We've got 5 waves all the way down here, and this is about the 61.8 retracement level that we were looking at from the previous trend. So yesterday we were talking about it coming down to 105.50. It's come down a little bit further than that, no big deal. So we're looking at this here. Now, this can be an A and a B and a C wave to here, and then we can essentially move up from here. But to do that, it would probably need to stay above the 105.72 area here. Below that, and the 5th wave will be starting to the downside, because 5 waves would be 1, 2, 3, 4, and then 5 to the downside. If we get 5 waves down through here, back down to the 105 area here, then we'll have 3 waves back up, and then we'll have another 5 waves down. So it would be expanding to the downside in that particular case there. So as you can see here, this is it on a 2-minute chart here, and it's, as you notice, it's got the same pattern as the S&P 500 and the other markets. So it's something that if you sort of bring them all together, then you can keep an eye on them. What you'll find is one will break before the others, so that will give you a little bit of a lead there. But essentially, we're looking for 5 waves up here in terms of I did call it 5 waves up to there. It's not probably right, but we'll just say that it's actually 1 to here, then an A and a B and a C for 2, up for 3, complicated 4, and then up for 5 here. So this wave through here, down through here, it would also be corrective as well. Because this one here was complex, the structure, that means that the next corrective pattern will be simple, because that's what corrections do. It's the guideline in nature of alternation. It will be complex, simple, complex, or simple, complex, more complex. So it's always alternating It's like waves one and waves two and wave four. One will be simple, one will be complex. The same with the internal structures of the market as well. So, anyway, as you can see, if this market finds resistance at the 72 here, then you'll need to be short from that side here. But you wouldn't go long here anyway. This is 106 here, so you need to be on the right side. If you're going to go long here, then you would need to be sitting on firmly on 106, and then you would use 110 to build a position on top of, and then 120, and you know all about group one and finding support on top of group one. Unless you can get good support, I don't mean a breakthrough like this, but I mean coming back and finding support on top of subgroup one or minor group one or any group one, then you're not ready to go up. So because the idea of group one is to hold the price to the closest largest number, and that's what it's doing, and this is what all this is about here. It hasn't left this situation yet, but you wouldn't go long until you're above other levels, so the bias is to the short side here. Right, the euro. Okay, a little bit sort of tricky here. I might just sort of do it. I just might use this chart here just to explain something. There's 5 waves down through here. Yep, that's what we're looking for of the euro. We're kind of in the middle, just here, about here somewhere, because each one of these structures here, like this one here, has got 5 waves in it. Then you got the corrective pattern, which will be coming back like this, and then this particular pattern, this third wave coming down through here, that will have 5 waves in it as well through here, something like that, but in there like that. So we're just in this little 4th wave here. That's where I reckon we are, in that one there. Okay, so we've still got this one to go down, and that will leave us down at the bottom of this one here. Then we've got this 4th wave here to deal with, and then we'll go down from that point. So understanding that we're in the 3rd wave, right? But in this 3rd wave, there'll be 5 waves, but we're in this wave here at the moment where we're heading back into this little section here. And normally with wave 3 here, so if we took wave 3 here, like this here, took that distance there, then wave 4 here would come back up to 38.2 retracement level to there, okay? So that's what a wave 4, that's what we'd be looking at there, okay? Now that's what we're also looking at in this smaller structure here. So when we're coming and looking at this smaller structure in here, coming down here, we're looking at the 3rd wave, the 4th wave come back to 38.2 retracement level. Now it's hit that at the moment, so it's done its distance here. So when we come back into here, we'll just try and run you through this, is we've got 5 waves down through to here, and then we've got the move back through here, and then this is the 3rd wave coming down through here. Now in this 3rd wave coming down through here, if I can just bring this out here, we've got down for wave 1, back for wave 2, yeah, and then we've got the whole 3rd wave down, all the way down to here, which is in 5 waves. I know this is a little bit tricky, but we'll see down for 1, back for 2 here, and then this is the whole 3rd wave down here, then the 4th, it'll be C, and then down for the 5th. So we're looking for, we take that top there, take that top down to this bottom down here, and this is the 38.2 retracement level. So we're just clipping that through there nicely at the moment. So that's that level there. So it's pulled back its distance, but it's also pulled back in the same pattern as the other markets, like the Australian dollar, the ASX 200, the S&P 500. They've all got this same pattern through here. So we're looking at this going as an A wave, some sort of B wave coming in through here, which will be in 3 waves. So it will be a B wave will be 5. And you can see that now, 1, 2, 3, 4, 5. So it'll be down for 5, back up for 3, down here again for the B wave. The B wave should pull back 61.8% from that low to that high there, coming back in 3 waves. It should be quite simple because this one here was complex, okay? But once we get this, we get this A, this B, this C, and then we go down. Okay, so yeah, we're in a 4th wave here, and they're normally complicated. And in terms of trading fourth waves, they're best left alone, okay? Because they'll take your money, and that's what the markets do. You'll make money in a trend, you give it back in a correction. So try and keep your finger off the button. I know it can be a bit addictive, but leave wave fours alone. Okay, well, that's kind of it in a nutshell. So just sort of recapping here a little bit on the Dow Jones here, we understanding that we were yesterday trying what we normally do with the first leg down in any correction is we just observe the first leg down to see if it's in 3 waves or 5 waves. Once we understand if it's in 3 or 5 out of the 12 corrections, then we can pretty much halve the correction. So we've taken out 6 of them, there'll be 6 left. But because we've got this 5 waves down through here and we expect it to come down a bit lower, then we will have this 5, we'll have another 3 back up and then another 5 down. So we're in a larger correction. It's not going to be that simple, but we also understand that, if it comes too far, if it goes under the 12.4, then we know that we've got a more serious top in play here, and we can kind of expect that now. So we'll see how we go down through here. But once we get under the 12.2 down here, then we know that that's really real sort of confirmation at that sort of point there. So anyway, the edge is to the downside still, and we just need to be careful that and understand that because we get this 5 waves down through here, that we will see some sort of bounce back up as well, and we'll see that on our market as well in terms of our market, because this is the SPY here. So we've got 5 waves down here. It's quite possible for our market to move back to the 61.8 retracement level. So from that high there roughly down to here, we can pull back up to this 61.8 level there in 3 waves. So that would leave us an A wave to here, a B wave to here, and a C wave up through here. Okay, so if we go short here, then and the market ends up here, well, then we're sort of stuck there, So we need to be sort of aware of that in terms of playing out with local stocks. So until this correction plays out here, the idea would be, yes, it's okay to short some stock, but just keep the position sizing really small and keep the stops away a little bit extra, do you know what I mean, to accommodate for any sort of higher bounce up there. I know that the 4-5 will be a strong resistance there, and also the subgroup 1 within there as well, and this is also for the cash market as well. So the 4-5-30, finding support on 4-5-30, like a nice solid support there, would see the market back up retesting supply levels, which would be at these lows here, which is also the 61.8% mark. So it'll all fit in quite nicely there. Alrighty, yeah, all right. Good morning and good luck.